Hi, I'm Romeo Caparassa. I'm a tax agent and run a little accounting firm called Tax Accounting Adelaide in Newton, South Australia. And I'm just going to go through some tax basics for those who've recently come to Australia and probably don't know much about our Australian system and what you need to know if you want to be starting a business in Australia. One of the first things you need to know is when you're in business you need to apply for what's called an ABN number or an Australian business number, and all businesses need to quote an ABN number when they provide services so that they are legitimately registering their income, and it's part of our Australian system to detect everybody and declaring their income. So if you do not quote an Australian business number when you provide services, the receiver of your services or goods is entitled to ask for a tax invoice stating your ABN number, and if you do not provide that, it can make your payment and withhold 48.5% tax from your payment. So obviously it's ideal for you to have an ABN number. A tax agent can register your Australian business number, or you can also do this online at abr.gov.au. Okay, I often get asked if you need a trading name, and yes, if you need to use a trading name, you do need to register that, and again, a tax agent can help you with that, or you can do that on your own online. You need to choose an entity type, so the main choices you have is to trade as a sole trader, which means that your income as a business gets aggregated onto your individual tax return and other individual income, and it's probably the most simplest one to run, easy to run, no one else involved, probably less accounting fees, no startup costs, additional costs because you're a sole trader. Another choice is to be a partnership. So partnership, typically you obviously want to be in business with someone else. It may be your spouse, or it may be someone who's another tradesman like yourself, and you want to double up your power and marketing as a partnership. This is also pretty easy to set up accounting wise. It needs a separate tax return as a partnership, and the income of the partnership is distributed to the partners as agreed. Normally, if there's two, it's half and half, and you also share the debts and liabilities of the company equally as partners. Another entity type is a company, and one of the benefits of this is maybe a lower tax rate if you earn a lot of money, but one of the downfalls is that the taxation rate applies to the first dollar of profit, whereas your individual sole trader, you get benefit of no tax in the early part of your income and profits. It can be a little bit more expensive to set up a company. Your startup accounting, legal costs of starting a corporate entity can be much more significant than a partnership and individual sole trader. You also have an annual ASIC fee, which is typically around the 250 mark these days, and your accounting tax return fees may be higher as well because of the complexity of doing a company tax return. Also, the last one is probably to have a trust. A trust is beneficial to maybe someone with a family business, so that income and profits can be split to more than one individual, which can be beneficial rather than if you made $200,000 profit, rather than one individual bearing the whole tax burden of that high income, it can be split to family members so that the lower amounts to the different family members can reduce the tax overall of the $200,000 profit in this instance. Another important question to understand is whether you need to register for GST. So a normal business needs to register for GST if their anticipated turnover is over $75,000 per annum, and that's for the business only, or for all businesses of a sole trader, for instance. And that doesn't include your salary, it just includes the business income. And you need to, well, you'll be obliged to register for GST if your turnover goes over the $75,000 mark. Some people may choose to register to be GST even though they aren't over the $75,000 turnover mark. For instance, if they're subcontracting to large companies, or if they have very little, they may have startup capital costs which they want to claim, or they are supplying a service which is GST free. For instance, a medical practitioner may want to register for GST to just claim back the expenses on GST, but they don't pay GST on their services provided. One of the biggest advices I want you to take away from me is that when you're in business, you've got to keep a separate bank account. Don't mix this up with your other personal accounts. It's very professional to keep one separate bank account for your business, and to keep all the bank statements of that bank account, and also attach maybe to the bank statement all the receipts that are going through the business, and keep your sales invoices as well as your purchase invoices, and that'll keep that's one of the most simplest things you have to keep together to put together your tax return for a business. And additionally, it'll keep your if ever the tax office wants to check your books, they'll on receipts and paperwork, they'll check that you've kept your documentation in order, including keeping receipts for the whole year or tax invoices. So how do you do bookkeeping? As I just mentioned, one of the simplest things to do is keep the separate bank account, keep the bank statements, and keep all your receipts and tax invoices and sales invoices, and attach them to the bank statements. And if you like, write on the bank statement what the actual expense was while it's fresh in the mind, so that you can go back later in the year and tally up all the different types of expenses and income you've got during the year. And your tax return will obviously summarise your income and expenses. So this is important to obviously get your tax right, and it's all you need, that framework to have that correct. A better way maybe is to keep use an accounting software, which will actually make everything probably a little bit more efficient and save you time, rather than you doing it the slow way by keeping manual records. As I've mentioned already, keep your receipts and be able to issue your sales tax invoices. And another thing I really want to impress to a young business person is to know the scoreboard of your business. So it's really important you know how much profit you're making regularly, so every month or at least every 3 months. Just like a sports game knows the score, and the coaches can adjust their game according to the score. A business owner should know how he's doing at all times, and if he's not doing well, he's not winning, or he's not making enough profit, he can look at and see why, with relatively short notice, what's going wrong. Bad businesses just show up to their accountant, show their accountants to their accountant maybe once a year, maybe sometimes 6, 7, 8 months after the end of the year, and they've got really lagged information on how their business is doing, and that's really not good enough to manage your business in a timely and efficient and controlled manner. So we're a tax agent who specialises in small business. My name's Romeo Caparaso. Our firm is called Tax Accounting Adelaide, and you can either book in on our website or call us directly on 8337 4460. We're at 202 Gorge Road Newton.